Hi, today I want to talk about a few aspects to consider when finding the right manufactured housing community. It's a vast real estate landscape out there, and it can become really difficult really quick to sort through all the investment assets that are available. And, it may seem that there are just too many options to look into yourself, and that may be the case a lot of the times. But one real estate investment that really I don't want you to overlook are manufactured housing communities. These are really a superb subclass of real estate. And, you may have seen my blog before, understanding the pros and cons of investing in manufactured housing. But in that blog, I just cover, a few things like affordability, the cash on cash returns, the rehabs that are generally less complex compared to single family homes, and really great deals that are still out there, and the hands-off nature of the parks, that they truly can be hands-off assets. And, mobile home and manufactured housing communities are really being established as one of the most viable places to live as uncertainty and housing insecurity arises. From the rental increases that we've seen lately to just unaffordable home pricing, more and more people are having difficulty finding a place to call home. And, with about 17.7 million people living in mobile homes, that's a full 5.6% of the U.S. population. The need for mobile homes are really on the rise. And, the increase in demand for these mobile homes is really where an investor can come in and fill a need in the form of a manufactured housing community. Now, these communities have a very low barrier to entry, and they can come with a lot of unique benefits that really set them apart from other real estate subclasses. From implementing kind of a low maintenance management structure to very high profit potential, overall affordability for your tenants. There really isn't many reasons not to look at this asset class. So I just want to dive into a few nuances of manufactured housing community investing, just so we can grasp, how do we begin this journey of investing in this class? So kind of to explain it in layman's terms, manufactured housing communities are where the owner rents out pieces of land. They're usually called pads, right, to tenants so that a mobile or manufactured home can reside on it. And investors would generally buy the entire mobile home park and then lease out pads to the tenants who either they rent or they own their own manufactured home. The owner of the, I'm just going to call it an MHC, manufactured housing community. So the owner of the MHC can have a plan to either have park-owned homes or POHs or tenant-owned homes, TOHs. Or a mix of both. Truly the most hands-off scenario would be where you simply own the land and not the actual homes that occupy the pads. And then it would be up to the tenants to take care of their specific homes. And utilities would be billed directly to the tenant as well. And as an investor, this is a really good sweet spot because you'll have very little to do with the maintenance of the actual homes, which saves you on capital expenditures and deferred maintenance costs and so on and so forth. The more units or pads that can be rented out really allows for a lower risk decision. You get into the economies of scale here. When you have a larger collection of units, normal occurrences such as vacancies and evictions and those types of things are kind of spread out across your portfolio. So you're taking less of a loss and you can absorb those things a lot better when you have a lot more pads. Now, we've kind of talked about MHCs a little bit. So let's talk about some of the goals that go along with MHC investing. The MHCs are really a real estate investment that require you to do some upfront work. And a lot of it has to do with location. You really have to have a good local knowledge of the area, such as the proximity to metropolitan areas, a good grasp of the demographics in the area, and employment options. If an investor doesn't do their due diligence with especially these aspects, then issues not only quite possibly will arise, but they just will arise if you don't do your upfront work. There's a there's a myriad of kind of things to consider, but I just kind of want to cover 3 today that need to be investigated when you're considering buying a manufactured housing community. And it's going to be proximity to a metro area. It's going to be the employment options that are offered and the actual demographics of it. Now, when talking about the proximity to a large metro area, I'm talking about a population of about 100,000 or more. That's the most desirable sweet spot. Having a metro this large will really ensure the basic infrastructure is present, that there is really easy access to essential services and really an abundance of employers that are going to make an MHC a desirable place to live. The larger the population density, the more likely that you're going to have a large selection of applicants to be potential candidates for your community as well, right? A large metro area tends to kind of attract more. So once you get a critical mass, you start to get essential services present, good utility structure present, proper governmental services and oversight, and really, we'll talk about this a little later, but a variety of work and employers offered. The smaller communities with the lesser populations tend to be greatly affected by shocks to the economy or one employer leaving town, and even environmental issues. Like if you have hurricanes or tornadoes or stuff like that, it could really damage the entire ecostructure of the town. This can cause, unforeseen vacancies and severe decrease in your revenue, which would put the property in jeopardy. And generally metro areas larger than 100,000 population will have more favorable characteristics that will support these MHCs very well. And, once you've confirmed the population density, you can start checking out metrics such as, median household income, housing vacancy, the average of 3-bedroom apartments. You can use websites like bestplaces.net, really good place to get free information. And you're probably thinking, why would I be looking at all this? Mainly because these metrics inform about your competition. It also informs about the affordability and the demand for workforce housing in the area. If there's a high housing vacancy rate, like if there's a 14, 15, 16% single family home vacancy rate and very low prices for 3-bedroom apartments in the immediate area, this means that there are going to be a lot more housing options available to your tenants. So that's not good, right? You want to see a high 3-bedroom rent rate. You want to see low housing vacancy, meaning there's not a lot of demand, not a lot of supply on the market. And moving on, areas near a larger metropolitan area may be a little more lenient when it comes to zoning regulations for MHCs. Because they're really feeling the crunch for workforce housing. They've got a larger population and they need to find housing for the folks that are doing the work, right? Over 20% of the population makes less than $20,000 a year annually. And this really makes up the large proportion of the workforce housing that you hear on the news so much. The population, or this population, really often is the lifeblood of small businesses, and they make up a large portion of low and medium wage earners that, these small businesses employ. So, it seems like manufactured housing communities would be a great solution to this housing issue. But there's some drawbacks to having these MHCs in smaller communities. They usually don't generate a lot of revenue for the city. Single family home communities generate a lot of property taxes. Well, with manufactured homes being non-permanent housing, they don't generate that property tax. Additionally, they have a disproportionate number of kids living in them, which kids utilize a lot of city resources. Name in particular school systems, right? They don't really generate a lot of tax revenue, yet they're utilizing the school system. So, it may cost $8,000 to $10,000 annually per child to educate them in our school systems. So these smaller communities really don't have the infrastructure and the wherewithal to be able to support to support the MHCs like they should be able to. The larger communities are better equipped to absorb these deficits and are seeing, MHCs as being more of a long-term solution to the affordable housing crisis as well, because apartments are unaffordable, housing's unaffordable, single family rent's unaffordable. I mean, really, affordable housing is kind of a misnomer nowadays. I mean, there just doesn't exist. So MHCs are really a good solution to that crisis. Another thing I want to talk about is having employment options for this workforce, right? We talked about it a little bit, but a lot of research points to there's people in metros that travel more than 60 minutes to commute to their respective workplaces. And these studies also indicate that these commuters really have a very low sense of purpose when they reach their workplace. And the people that travel less than 30 minutes get more enjoyment and more purpose from their work. They're happier, they have lesser anxiety levels, and they generally report themselves as being less tired than their counterparts who have to travel over 30 minutes to go to work. So it kind of begs the question, how important is employment options for your mobile home community, right? So, I mean, one of the top priorities a candidate is looking for in employment is when they search it in Google, it's jobs near me. That's what they look for. And you would think it would be a job in their specific field of interest or something they went to school for. And I'm sure that's important, but the thing that is searched the most is jobs near me. So really, the benefits of finding jobs near and close to home can be wildly beneficial to our prospective residents. So most of the tenants in mobile home communities, it becomes even more vital because these are low to middle age earners. So distance to drive and commute to work plays even a larger role where they choose to live. It's super important to understand the employment landscape and ensure that there are plenty of opportunities for work in the local community where they don't necessarily have to drive 30 minutes even. That there are public transit and ways that they can get to work without necessarily having to go over great distances. Characteristics such as good walk scores. And like I said, high availability of public transportation. These are things to consider when looking into certain manufactured housing communities. And, it's vital that jobs are not only close, but they're numerous and that they're varied across different sectors. The greater variety of employers, the less likely an economic downturn will affect your mobile home community. If there's one major manufacturer that employs your entire community and it stops making widgets and it shuts down, well, so do you, right? So employment depth and breadth is really, really important when evaluating your community that you're going to invest in. The next thing I'd like to talk about is proximity to Walmart. And, in the retail space, understanding customer behavior is vital. Nobody's better at that than Walmart. Demographic trends tend to be straight line and they're able to be anticipated with good demographic studies. And this leads companies to be able to predict future customer behavior, and then they can adjust their strategies to customer behavior. Well, one retailer that's been using demographics with like ninja focus is Walmart. Walmart understands demographics. And they are, they find locations that are profitable. And, we as real estate investors can use these cues implemented by their multi-billion dollar, the multi-billion dollar business, but also their multi-million dollar marketing departments, right? And their demographic searchers. One of the things I check first is I get on Google Maps and I put on satellite view, and then I look and see where the closest Walmart is. If there's a Walmart within a 10-minute drive, well, I'll keep moving forward in the due diligence process. And, I'm being a little bit facetious here, but I just don't want you to sleep on the fact that Walmart has done the heavy lifting for you. They've ensured that there's population density. They've ensured that there's a job market, that there's great median income, there's affordability index. They have done all the work for you from that standpoint. So use it, right? When's the last time you saw an abandoned Walmart? The only time they abandoned one is when they built a bigger one right across the street. These guys know what they're doing. So, it's not by far, it's not the only demographic that we use, but it's super valuable. As, I know if they're there, then it's an area worth investigating further. And, once you've confirmed that demographics are working in your favor, and only then, that's when you look at the park itself. So many people get this wrong, and don't miss this. I can't tell you how many people come to me and ask me, hey, what do you think of this park? And I answer the same way every time. I don't know. What does the market look like? Because you cannot change your location. We can talk about the mobile home community specifics in a later blog, but you're not going to be able to move your community forward if you're in the wrong location. So the location is still the most important. So I hope that was helpful. I want you to know that manufactured housing communities can be great opportunities to invest. This subclass is recession proof. It's generally low maintenance once you get the right teams in place, and you have the ability to drive appreciation over time. And with any investment, there's always going to be a level of risk that you need to be comfortable with. But there's risk in most things worth doing. And I always say there's the difference between investing and speculating. To me, the stock market is speculating because my principal is at risk, and there is a chance of me making money. With investing, my principal is safer and not at risk as much, and there's a chance of me making money. With hard asset investing, I rarely see hard assets go to zero. I've seen many stocks go to zero in my time. So I think if you do your due diligence, you can rest assured that you are investing rather than speculating. From multifamily properties to manufactured housing communities to mineral rights, I've built strong partnerships while acting as the principal on over $125 million worth of real estate and business deals. If you are ready to take the next step towards financial freedom, I want you to be a part of our community. Reach out to me today to learn more how I can help you, and we can partner on reaching your investment goals. And here's to winning your time back.